Yesterday, February 5th, 2026, felt like the end of the world. If you were awake, staring at your phone screen in the middle of the night, you know exactly what I'm talking about. You felt that cold, heavy stone in the pit of your stomach. You watched as the entire financial board lit up in red, a sea of crimson that seemed to have no bottom. It wasn't just a bad day, it was a slaughter. Bitcoin, the asset that was supposed to be your ticket out of the rat race, plummeted vertically, slicing through support levels like they were made of paper, crashing all the way down to $60,000. For a terrifying moment, it looked like it was going to zero. But it wasn't just Bitcoin, that is the part that confused everyone. You looked at gold, the safe haven that has survived for 5,000 years, the asset you bought to protect yourself from chaos. It was down 11%. You looked at silver, and it was down 30%. You looked at your 401k, and the US stock market was bleeding. It felt like gravity had suddenly failed. It felt like everything was crashing at once. And then, just to twist the knife deeper, something even crueler happened today, February 6th. Just as the panic reached its peak, just as millions of regular people, people like you, your neighbors, your coworkers, couldn't take the pain anymore and hit the sell button at $60,000, the market ripped back up. In the blink of an eye, Bitcoin bounced from $60,000 to $66,000, a violent 10% recovery. If you sold yesterday because you were scared, you didn't just lose money, you were executed. You sold the exact bottom. You handed your coins over to the institutions, to the whales, to the smart money who were sitting there with open mouths waiting to catch your panic. This is called a whipsaw. It is the most brutal mechanism in finance. It is designed to transfer wealth from the impatient to the patient, from the fearful to the prepared. And right now, you are probably sitting there, staring at the chart, asking the question that is trending on every search engine in the US. Why? Why is everything crashing, and why do I feel like I'm the only one losing? I'm Ben, and today we are going to ignore the mainstream media headlines. They will tell you it was a technical correction. They will tell you it was profit-taking. That is garbage. We are going to dig deep, deeper than we ever have before, into the rotting machinery of the US economy to explain why this happened. We are going to look at the liquidity trap that forced gold to crash alongside Bitcoin. We are going to look at the lie of the strategic reserve. And most importantly, we are going to look at you, because the reason this crash hurt you so much isn't because of what the Federal Reserve did. It's because of your own financial fragility. This is a story about how the system broke you and how we are going to fix it. Let's start with the diagnosis. Why did safe assets crash with risky assets? The textbooks tell you that when risky things like Bitcoin go down, safe things like gold go up. That is diversification 101. But yesterday proved that in a real crisis, the textbooks are useless. Imagine a crowded theater. The movie is playing, everyone is happy eating their popcorn. Suddenly, someone screams, "Fire!" That scream was the news that the US government had abandoned the Bitcoin Strategic Reserve Plan. Now, inside that theater, you have massive hedge funds. These guys are leveraged 10 to 1. They borrowed billions of dollars to bet on the movie continuing forever. When the fire alarm rang, the banks called them. This is the margin call. The bank said, "We need our money back. Now." These funds didn't have cash. They were all in. So what did they do? They couldn't sell Bitcoin fast enough because the price was collapsing. So they sold what they could. They sold their winners. They sold their gold. They sold their silver. They sold their Apple stock. They sold your safety to pay for their mistakes. This is called a liquidity crisis. In a liquidity crisis, the price of an asset doesn't reflect its value. It reflects the desperation of the seller. Gold didn't lose 11% of its value yesterday. It lost 11% of its price because desperate whales had to dump it to survive. You were caught in the crossfire of a Wall Street war. But that's the macro explanation. That's what happened in the high-rise towers of New York. Let's talk about what happened in your kitchen. Let's talk about why you panicked. The reason you felt like the world was ending at $60,000 wasn't because you analyzed the blockchain hash rate. It wasn't because you studied the supply dynamics of gold mining. You panicked because you are broke. I don't mean you are homeless, I mean you are US middle-class broke. You live in the richest country in the history of the world, yet you are walking on a tightrope. Look at your life in 2026. The inflation that they told you was transitory back in 2024, it never left. It just became your roommate. You go to the grocery store, and that box of cereal is $6. You look at it, and you remember when it was $3, but you buy it anyway because you have to eat. You pay your rent or your mortgage, which has ballooned to take 45% of your take-home pay. You pay your car insurance, which doubled last year. You pay your utilities, up 18%. You are bleeding cash from 1,000 tiny cuts. So when you bought Bitcoin or gold or stocks, you weren't investing in the traditional sense. You were trying to escape. You were treating the market like a lifeboat. You put money in there that you actually needed for real life. You put your emergency fund in there. You put your house deposit in there. So yesterday, when Bitcoin dropped to $60,000, you didn't see a chart. You saw your life falling apart. You saw your escape route closing. You realized that if you lost this money, you wouldn't be able to pay the bills next month. That terror, that biological urge to sell everything and run, that is the result of the US economy squeezing you until you pop. The system is designed to keep you fragile. It is designed to keep you living paycheck to paycheck, even if you make $100,000 a year. Because when you are fragile, you make mistakes. When you are fragile, you sell the bottom. This leads us to the concept of the coward's tax. When the market whipped back up to $66,000 today, the market collected a tax. Who paid it? The people who sold yesterday. Who collected it? The people who bought yesterday. The people who bought at $60,000 weren't geniuses. They didn't have a crystal ball. They just had one thing you didn't: cash. They had a pile of boring, unsexy US dollars sitting in a bank account. They weren't worried about paying rent, so they could look at the crash objectively. They saw a sale. You saw a disaster. This is the brutal truth about the everything crash. It wasn't a crash for everyone. For the wealthy, for the prepared, for the liquid. Yesterday was the greatest shopping day of the year. For the fragile, for the overleveraged, for the hopeful, it was a funeral. We need to stop asking, why did Bitcoin crash? And start asking, why was I vulnerable enough to let it hurt me? The chart will recover, Bitcoin will survive, gold will bounce back. But if you sold, your capital is gone, your position is gone, and you are left on the sidelines watching the recovery happen without you. This is the trap. And in the next part of this deep dive, we are going to look at the neuroscience of why your brain tricked you into pushing that button, and exactly, step by step, how we are going to rebuild your financial fortress so that the next time the world crashes, you are the one holding the bucket, not the bag. Now that we have accepted the brutal reality of the crash, the fact that the market flushed to $60,000 to steal your coins and then ripped back to $66,000 to steal your hope, we have to answer the most important question. Why did you let it happen? Why, when you intellectually know that buy low, sell high is the golden rule, did you do the exact opposite? Why did your finger hover over the sell button at the exact moment you should have been buying? The answer isn't because you are stupid. It's because you are human. And unfortunately, human beings are biologically hardwired to lose money in the stock market. You have to understand that your brain hasn't had a software update in about 50,000 years. You are walking around with the hardware of a hunter-gatherer living on the African savanna. In that environment, threats were physical and immediate. A rustle in the grass meant a tiger. A sudden drop in temperature meant freezing to death. Your brain evolved a specific mechanism to handle these threats: the amygdala. It is the lizard brain at the base of your skull. Its only job is to keep you alive by triggering the fight or flight response. Yesterday, when you unlocked your phone and saw that red cliff, Bitcoin down 8%, gold down 11%, your lizard brain didn't see financial data. It saw a tiger. It saw a threat to your survival. It hijacked your nervous system and flooded your blood with cortisol, the stress hormone. Here is the science of why you are broke. High levels of cortisol physically shut down the prefrontal cortex. That is the part of your brain responsible for logic, mathematics, and long-term planning. When you are panicked, you literally cannot do the math. Your IQ drops. You become incapable of thinking about next year or retirement. You can only think about right now. You can only think about stopping the pain. Psychologists call this loss aversion. The pain of losing $1,000 is psychologically twice as intense as the pleasure of gaining $1,000. So when the market crashes, your brain screams one command: make it stop. The only way to make the cortisol go away is to sell, to go to cash, to run away from the tiger. The financial system, the news apps, the 24-hour cycle, the red alerts, is engineered to trigger this biological flaw. They want you scared, they want you high on cortisol. Because when you are scared, you are predictable, you sell the bottom. But the trap goes deeper. For the last few months, you were also suffering from the dopamine trap. When Bitcoin was climbing to $71,000, you were checking your phone 50 times a day. Every green candle gave you a hit of dopamine. You felt like a genius. You felt rich. You started spending that imaginary money in your head. You fell victim to the wealth effect. Then, yesterday, the dopamine supply was cut off. You went into withdrawal. You felt physical sickness. And in that chaotic mix of withdrawal and terror, you made the worst financial decision of your life. You have to realize, you are not fighting the market. You are fighting your own biology. To win, you have to be colder than the algorithm. You have to override millions of years of evolution. And you can't do that if your financial life is a mess. So, how do we fight back? We don't fight with willpower, we fight with action. Welcome to the Deep Clean. If you panicked at $60,000, it means your personal finances are fragile. You are over-leveraged and underprepared. We are going to fix that right now. This is the boring, unsexy, painful work that separates the rich from the tourists. Step 1. Kill the leverage. This is non-negotiable. If you are holding any position with borrowed money, margin, futures, options, close it. I don't care if you think Bitcoin is going to $100,000 tomorrow. You have proven you cannot handle the volatility. Leverage in the US crypto market is a widowmaker. It amplifies your cortisol. It turns a 10% dip into a 100% loss. If you own the asset outright, spot, a drop to $60,000 is annoying. If you are leveraged, a drop to $60,000 is fatal. Cut the rope, accept the loss, survive. Step 2, the war room audit. Tonight, put the charts away. Stop looking at the price of Bitcoin. It doesn't matter. What matters is your bank statement. Print out the last 90 days of your transactions. Grab a red marker. You are going to circle every single vampire cost. I'm talking about the subscriptions you forgot about. The $15 salads you buy at work because you're too lazy to pack lunch. The impulsive Amazon purchases. In the US, we are conditioned to retail therapy, spending money to feel better. But spending money makes you fragile. Every dollar you wasted on junk last month is a dollar you didn't have yesterday to buy Bitcoin at $60,000. You literally ate your future fortune. Stop it. We are stripping your expenses down to the bone until the emergency is over. Step 3, the scripts. You are going to stop being a victim of the economy and start being a negotiator. You are going to call your credit card company. Yes, actually call them. You will say, "Hi, I've been a customer for 5 years. I'm looking at my statement and this 22% APR is too high. I have a 0% balance transfer offer from a competitor. I want to stay with you, but I need you to lower my rate to 12%. If they say yes, you just saved thousands. If they say no, move the balance." Next, talk to your boss. Inflation is real. Say this: "My cost of living has increased by X% due to inflation. Effectively, I'm taking a pay cut by staying at this salary. Based on my performance, I need a market adjustment." If you don't ask, the answer is always no. You need to increase your shovel, the amount of cash you can throw at the hole in your finances. Step 4, attack the bad debt. If you are holding Bitcoin while you have $5,000 on a credit card at 25% interest, you are mathematically insane. You are trying to fill a bucket with a hole in the bottom. Sell the old electronics. Sell the clothes you don't wear. Drive Uber on the weekend. Do whatever it takes to kill that high-interest debt. Debt is the chain that keeps you in the liquidity trap. When the market crashes, the person with debt panics. The person with no debt and cash in the bank sleeps like a baby. This deep clean hurts. It requires you to say no to your friends. It requires you to downgrade your lifestyle. But you have a choice. You can look rich or you can be rich. You can't do both right now. Once you have stopped the bleeding, once you have killed the leverage and attacked the debt, the fear starts to fade. The cortisol drops. You regain control. And from this solid foundation, we can build the machine that will make you wealthy. We can build the system. Once we have stopped the bleeding, killed the leverage, and fixed the biological glitches in your brain, we are ready to play offense. We are ready to build the system. The reason you lost sleep yesterday when Bitcoin hit $60,000 is because you were trying to manage your wealth manually. You were trying to use your flawed, emotional, cortisol-flooded brain to make complex financial decisions in real time against supercomputers. You cannot win that game. The only way to win is to remove you from the equation. We are going to automate your financial survival so that the next time the US economy stumbles, or the Fed pivots, or Bitcoin crashes 20% in an hour, you don't panic. You profit. The foundation, the FU money fund. This is the most critical missing piece for 99% of the people who panic sold yesterday. You need an emergency fund. And I don't mean $1,000 under the mattress. I mean 3 to 6 months of your bare bones living expenses, rent, food, insurance, sitting in a high-yield savings account. This money is not for investing. It is not for buying the dip. It is not for crypto. It is to be held in boring, unsexy US dollars. Why? Because cash is oxygen. When you have no cash, you are suffocating. When the market crashes, you feel like you are drowning because you know that if you lose your job, you are dead. But when you have 6 months of expenses sitting in the bank, you have a superpower. You have FU money. When the market crashes to $60,000, you don't stress because your bills are covered. You don't have to sell your Bitcoin to pay the mortgage. You can afford to wait. This fund buys you the psychological bandwidth to be a diamond hand. Without it, you are just a gambler walking a tightrope without a net. Build this first. Before you buy one more Satoshi, build this. The strategy? Be a vulture. Stop trying to be a hero. Stop trying to time the exact bottom. You aren't that smart, and neither am I. Instead, be a vulture. In nature, the vulture doesn't hunt. It waits for the lions to kill, for the chaos to settle, and then it feasts. Yesterday at 60,000, that was a feast, but you were too scared to eat. We are going to implement automated dollar cost averaging, DCA. You are going to set up a recurring buy. $50, $100, whatever you can afford after your audit, every single week. It happens on payday automatically. You don't look at the price, you delete the app. When Bitcoin is $70,000, your $100 buys a little slice. When Bitcoin crashes to $60,000, your $100 automatically buys a bigger slice. You are buying the dip without having to summon the courage to click the button. The system does the hard work for you. It turns you into a relentless accumulation machine. Over time, the volatility cancels out, and you capture the growth of the asset class. This is how the wealthy in the US stay wealthy. They don't panic, they automate. The long game, the 4% rule. We need to talk about the destination. Why are we doing all this? The goal is to reach a number where your money works harder than you do. The 4% rule is a standard in personal finance. It says you can withdraw 4% of your invested portfolio every year and never run out of money. If you need $60,000 a year to survive in the US, you need $1.5 million invested. That sounds like a mountain. But it's just math. If you invest $1,000 a month into the S&P 500 or a balanced portfolio averaging 8% returns, you will get there. It takes time. It takes discipline, but it is inevitable. The crash yesterday was a distraction. It was noise. The signal is the long-term trend. The signal is that the US dollar is losing purchasing power, and scarce assets are gaining it. Your job is to stay on the path. The philosophy? Freedom over flash. Finally, I want to talk to you man to man, or woman to woman. Why are we suffering this discipline? Why are we eating the cheap cereal and driving the old car? Is it to buy a Lamborghini? Is it to flex a watch on Instagram? Number. If that's your goal, you will stay poor because you will spend your wealth as soon as you get it. The point of money is freedom. Freedom from the alarm clock that woke you up at 6 a.m. this morning. Freedom from the boss who doesn't respect you. Freedom from the anxiety that sits on your chest when you read the news about a recession. When you have debt, you are a slave to the past. You are working today to pay for yesterday's choices. When you have no savings, you are a slave to the present. You are one paycheck away from ruin. But when you have wealth, when you have the FU fund, the automated investments, the system, you own the future. You are doing this so that when the Federal Reserve decides to print another $1 trillion, it doesn't destroy you. It inflates your assets. You are doing this so that when the government rug pulls a promise, it doesn't ruin your life. It barely inconveniences you. You are doing this to become the central bank of your own life, to be sovereign, to be unbreakable, to be the kind of person who can look at a 30% crash in silver and not see a disaster, but see the greatest buying opportunity of the decade. Conclusion. The crash to $60,000 and the bounce to $66,000 was a test. It was the universe asking you, are you serious about this? Most people failed the test. They paid the coward's tax, they sold the bottom. But you are still here. You are watching this video. You are learning. Don't waste this pain. Use the regret you feel about yesterday as fuel. Go home, build your emergency fund, kill your debt, automate your buying. The next time the market crashes, and it will crash again, I want you to be the one smiling. I want you to be the vulture. I want you to be the one winning. The US economy is tough. The game is rigged. But you can be tougher. Stop complicating it. Start getting free.